Every industry has its own words that have a special meaning, and so does trading. This lesson will introduce you to some of the words that you'll need to know. Being in a position means that you're in a trade. It can be either a long or a short trade, but if you have an open trade, then you are in a position. You are flat if you do not have any open positions. Equity is just another name for stock, so we are also known as equity traders. Day trading means you only hold the stock during the day. You do not hold any positions overnight. The goal of a day trader is to catch a small move with a large number of shares. For example, a 25-cent move with 1,000 shares will give you a $250 profit. Investors do the opposite. They hold a small number of shares for long periods of time. Not holding stock when the market is closed limits risk, because news can come out and cause a large price move in a stock. And if that happens, you can't place a trade to get out of a losing position, a trade that's losing more and more money. Definitely not a thing you want to happen to you. So what happens is news that comes out, it causes a big price move in a stock, and that happens all the time. So we definitely don't want that to happen to us. We want to exit all positions before the market closes each day, like all other day traders do. Swing trading typically means holding a position for a few days up to a few weeks. FINRA is the government organization that sets the rules for the stock market. Spelled out, it's Financial Industry Regulation Authority. Now, there are two ways to analyze a stock to decide if you want to buy it or not. You can use fundamental analysis or technical analysis. Fundamental analysis means looking at the company. You look at the profit margins, the management. You compare the product and service to its competitors. You look at financial ratios like the price-earnings ratio and return on equity, like that. Technical analysis is just looking at the stock charts. It's completely different. It's analyzing where buying and selling pressure is coming from and at what levels. Now, stock prices follow the fundamentals over long periods of time, like months and years. But all stocks go up and down over the short term, seconds, minutes, and hours. For that reason, we'll spend a lot of time on technical analysis because that's what we need to know, and very little time on fundamental analysis because that doesn't relate to us very much. Market makers are companies required to post bid and ask quotes at all times during market hours. They add liquidity to promote smoother price changes and a guarantee to the public that someone will be able to be on the other side of your trade when you place an order. Banks, brokerage firms, and trading firms are mainly the companies that are market makers. Over 500 companies are market makers on the NASDAQ. Collectively, market makers are the ones who set the price on the NASDAQ for any given stock. Now, on the New York Stock Exchange, it's a little different. They don't have what's called a market maker, they have the specialist. And whereas there might be 10 or 15 or 20 market makers on any stock in the NASDAQ, there's only one specialist for any stock on the New York Stock Exchange. Now, essentially, they do the same thing. It's just that the rules about how they go about it are a little different. We won't get into all of that right now. The specialist also adds liquidity, makes sure trades go through, and tries to ensure smooth price moves over trading days. Okay. Now, the NYSE specialist, he sets the price, but that doesn't mean he controls the price. He still has to go along with market pressure, buy and sell orders. Okay, if he tries to go against that, he's going to lose a lot of money and be like trying to swim against the ocean, crashing down on you. So he really can't do that if he wants to not lose money. Okay, but like a market maker, he does add liquidity and he does move the price to where it needs to go. Now, there are also brokers and floor traders on the floor of the New York Stock Exchange that are not the specialist. Now, two floor traders that are pretty well known are these two guys, Charlie Gasparino and Kenny Polcari. These guys appear on CNBC or Bloomberg from time to time, and they're quoted a lot in articles. Okay, so they're pretty well known, and Charlie Gasparino has been around for a long time. He's pretty old. He's been around for decades. Now, you may notice, just like these two floor traders, there's something in common with them. That's right, they're both Italians. Okay, take a look at this. Look at these names on CNBC. All of these people have worked or currently work at CNBC. And just like the previous two, they're all Italians. So why is that? What's the deal with Italians? Well, it turns out that the New York Stock Exchange was started by Italians. So these people in the industry who work on the floor as brokers, as traders, or as reporters at CNBC, they're the posterity or the descendants of the Italians who started the New York Stock Exchange. Or they're just Italians and they're friends of the people who are the posterity. Okay, when you start trading, you need to know the following. Your buying power is going to be $25,000. So the max number of shares you can trade on any one stock at any given time is going to start out at 100 shares. Okay, you can't trade more or less than that. It's going to be 100 shares. Now, you can trade more than one stock at once of 100 shares each up to your buying power. But I highly recommend starting out that you only trade one stock at a time because there's more than enough risk doing that, just one stock at a time. Your daily loss limit is going to be, I think it's going to be $40 starting out. Okay, so that means that you're going to have to keep your losses tight, and you need to learn to have your entry points to be very sharp and exact where you want it to be. Because, I mean, if you take a 10-cent loss, it's only going to take 4 trades and then you're done for the day. Okay, so you want to learn to have exact entry points, exactly where you want it to be. Now, trading hours are 9:30 a.m. to 4 p.m. Eastern time. Okay, but you are going to be required to exit all trades. In fact, the software automatically gets you out of all trades. It's either 10 or 15 minutes before the close every day. I forget which. I almost always just get out before that anyway. Now, there are also no after-hours trading. It's actually possible to place trades after hours. There's really low, volume in trading after the market closes, but it does happen. We do not allow that, just so you know. In addition, the market will be closed on regular holidays like Christmas, Thanksgiving, New Year's Day, New Year's Eve, and so forth. So be aware of that. Now, here's the cool thing about trading and how you make a lot of money. Your buying power is going to increase after you prove yourself, after you have proven results and consistent profits. Once you do that, then scaling up is easy and you can make a lot more money. For example, when you start trading, and if you're able to make 30 cents per day on 100 shares, that's only $30 a day or $600 a month. That's not very much money, okay? If I had to live on that, I'd starve to death. So you're definitely not going to get rich trading just 100 shares per day. But that's going to make it so you prove yourself. If you're consistently doing that, you're guaranteed to get more buying power and be able to trade more shares. So look at it then. If you trade 1,000 shares at a time, that's making $300 a day, or $6,000 a month, or $72,000 a year. Now, that's a pretty big step. You don't just go from 100 to 1,000 shares. First, you go to 100 shares, and then you take it one step at a time to 200 shares. And as long as you're consistently doing well, you keep getting moved up. And you'll get more and more comfortable as you are consistent, and then you can take it to the next level, okay? At some point, you could be trading 1 to 2,000 shares. And at 2,000 shares, if you're only making 30 cents a share, that's $600 a day, $12,000 a month, or what is it, $240,000 per year. Okay, and this is US dollars. This is all of this, US dollars, because we're trading the US stock market. So you can see that that's great money. All you need to do is grow your skills so that you're consistently profitable. And then you'll be given more room to make money step by step. Okay? So there's good money to be made in this industry. From past trading companies that I've worked at, I personally know, I think it's 6 millionaires. I know 3 to 4 of them for sure are millionaires. The other 3, I don't know if they spent all the money or not, but basically I know 6 guys who've made millions of dollars. I know between 10 and 20 traders who consistently made $10,000 to $30,000 a month, almost every month. Okay, great money. Okay, really good money. And then I've seen, with my own eyes, I've seen traders make over $10,000 in a day, sitting right next to them watching it happen. So once you learn the skills, there's great money to be made in this industry. Just want you to be aware of that. So let's review. The specialist sets the price for New York Stock Exchange stocks. The market makers provide liquidity and the other side to your trade for NASDAQ stocks. Another name for stocks is equities. I believe your daily loss limit is going to be $40. That's subject to change. Please, find that information for sure as you start trading. I'm sure we'll give that to you. Now, like I said, the max number of trades that you can trade at any one time is any limit up to your buying power, up to $25,000. So conceivably, if you bought 100 shares of a $50 stock, that's going to be $5,000 per trade or 5 positions. But starting out, you definitely do not want to have 5 positions on at once. I don't do that. Usually I just do 1 or 2. Okay, so I highly recommend you just start out with 1. Okay, and realistically, once you get good at this, you'll be able to make quite easily $100,000 to $300,000 per year. Okay, it is going to take several months or a year or more to get to that point, but once you learn what you're doing and get comfortable, it really doesn't take that long to do it. You could be doing that inside of a year. Okay. So take the quiz now on terms and definitions. And when you're ready, move on to the next lesson.